Hey folks, it's Wilson and making another quick video for you guys. I'll be posting a part 2 to this video where I show some live day trading as well as some more examples of some scalping. So in this quick video, I'm just going to go over the basics of scalping. When it comes to day trading, it's a strategy used by a lot of people, penny traders, penny stock traders, momentum traders. They love this strategy and it works really well for quick profits. I'll kind of go over the upsides and downsides. If you guys want to see the video that I'll be posting after this, maybe in a day or two, where I go over more in depth with live examples of scalping, just subscribe and I'll keep you guys updated. You guys should see it in your news feed. Again, it's Wilson. You can follow me on Twitter at @isWilson8. So scalping day trading is a very popular strategy. Everyone talks about. A lot of beginners like to use it because of the quick profits. Basically, with this strategy, you want to take fast moves for quick gains. So, for example, this applies to more of a small cap stocks with low float because when volume kicks in, it will drive the price upwards. So whether you're going long or you're going short, this strategy can work, and day traders, they usually try to identify if a stock is oversold, then they want to go in for a quick scalp on the short so that they can cover the profits. Or if they're going long, they want to see a good opportunity to buy on the dip or at the beginning of the day for the gap trade. Basically, you go in and out quickly. You never hold overnight, and the trading time frame could be anywhere between like 2 minutes on the stock. Some people hold it for like 5 minutes. Some people hold it for an hour, but it never goes overnight. So this isn't a swing trade strategy. You can purchase big shares for big and quick gains because most of these scalping strategies you want to go for lower small cap stocks, so the price to enter isn't too high, and you can take a bigger position. For example, if it's like a $2 stock, you can easily purchase like 2,000 shares for just like 4,000 bucks. So you're able to leverage that and gain gain quicker profits. A lot of times the problem with a lot of people that do scalping is that there are some obstacles such as the pattern day trading. You can't day trade for more than like 3 times a week, and that makes the strategy very hard because you're trying to buy in the same day and sell at the same day. But the thing is that most advanced scalpers, what they do is that they get in multiple positions every single day, whether that's the same stock with a lot of momentum by doing partial sales, buying back at the dips, averaging down, or by just taking multiple stock positions for that quick pop. The thing is that you don't want to look so much at the numbers that you're gaining. For example, you're like, oh, I just made 100 bucks off this one. That's so little money. The fact is that if you're in like 5 positions, imagine if you had like 4 wins, right? That could be 400, and everything adds up, even if it's just 20-cent pop. Um, you can, like I said, you can go short panic. So when there's a lot of people short selling, you can go for that short squeeze. If you guys don't know how short squeezes work, I did post a video on it. Just search under my channel, and you can go long for a quick pump. Now, there's a lot of downsides to scalping as well. There's huge risk involved. Most of the time, these stocks are pump and dump. So you ride with the pump, and then towards the midday when it's slower, what happens is that all the volume starts to drop, and then you end up losing like 50 cents per share. So it's very important that when you're doing scalping, that you set stop losses and you go in with a strategy and a good risk management. Trades don't get executed sometimes when it comes to scalping because the price is moving so quick and the spread is so wide apart from the bid and ask. So a lot of times you're like, oh, I'm trying to get my order filled. I'm trying to sell at this price to take my profit. And then next thing you know, you go into your broker site, you type in the order, and bam, the stock drops by 20 cents. And we don't want that. So there is a downside scalping. I would say even the most expert traders using the toppest and most quickest platforms don't get the orders filled all the time. And I usually get very frustrated when that happens. But when it comes to day trading, it's very important to control your emotions. You can't pray and swing usually with these stocks. So what I mean is, like, let's say you bought in at $4 and then it drops to $3.90, and then you go like, oh, maybe this is a good stock, and it drops down to $3.80. Now you're like, maybe I'll just hold overnight. It's harder with scalping because most of the time these stocks just jump up and down for just that single day, right? And it doesn't ever hit the highs again for, I don't know, like a month or 2 months, depending on the news or catalyst or what is driving the movement. So price movement is super quick. Another downside of scalping is you gotta focus a lot. You have to be at your computer. You can't just go take a bathroom break because your stock can drop like 30 cents, and you don't want that. And that's why it's important to set the stop loss, as I always mention in all my videos. Um, Another downside I would say is the PDT rule, the pattern day trading rule. For the people with lower balances, it's harder to get past this, so it makes scalping rather hard, and you have to kind of stick with swing trading at least initially until you build up like 25,000. If you guys want to know creative ways to get around the PDT rule, you can check out my other video on how to get past the PDT rule. Let's talk about the benefits. So scalping, you can take advantage of these strong catalyst movements, especially with biotech stocks, where they go like, oh, we just released some sort of phase 2 results. We just got approved by FBA, and for sure that's going to spike the price up. So you can take advantage of these pumps. And if it jumps up by like 50 cents and you got in for like 1,000 shares, boom, you got $500 in profit for that day. And you can call it a day. Um, it reduces most of the risk from the market event news. So like for example, if you're in long for a stock like GE, General Electrics, where they're like super slow, and then what happens is that it gets tanked because of some earning news or some bad news released by some other competitors, then you're holding this position for 3 or 4 days and you're just losing dollar and dollar every single day on it. But with scalping, you pretty much reduce the risk of some of the market event news because most of the time you're trying to pump, right? So you're looking for good news and strong news. You have more control because you can apply a lot of risk management strategies. So let's say you decide to take 5 positions, you can say that my stop loss is 20 cents, and my profit is 50 cents. So that way you always enter a trade knowing where you're gonna get out in and when you go get in at. It's less stressful after a market closes. For example, when I'm swing trading, I'm always looking at the news. I'm always looking at the charts for the positions I'm holding in. I'm looking at what people are talking about in chat rooms because I'm anxious. I'm holding that stock and I'm worried that some bad news might come out. You can close out your positions early and take the day off. Like I said, a lot of the movements happen between the first 30 minutes to 1 hour of the day. So you can go for those quick pumps, get like $1,000 in profit for the day, and take the day off. So, but it is important to take breaks. You don't have to worry so much about merger, earnings, and all that nonsense that gets you caught as a swing trader, right? And another thing that's very powerful about scalping is, especially with the advanced traders, they can trade the same exact stock multiple times in a day. So you see it going up, you go for that pump, and when it drops, you short it, and then afterwards you buy back in at the dip, and you go with the momentum. And as long as volume keeps pushing, these low flow stocks, they're always going to be profiting you whether you're shorting or long. So let's talk about a quick example. I think this was the best chart example that I can find. Again, in later on, I'll be uploading another video of some live day trades where I show examples of me scalping. But pretty much, for example, right here, you can see the short trend is happening. So you can get in position around right here, and then you close out your position right here, buy back the cover, and then you buy the stock again to go long for this breakout, and then you stop right there as soon as you see the reversal, what looks like a reversal that's about to happen. You have your stop loss and it closes out. And then later on in the day, you see this upward trend coming back in, you see volumes kicking back in, and you're looking at all your indicators, you see it's good, you buy back in and you go long for another quick pump, and then you close out. You can also implement strategies such as, let's say you close out and then you decide to buy back in on this early breakout right here. And as soon as it hit this second green candle, you don't have to keep waiting. You don't have to wait until it hits the top highs before you sell. You can do a partial sell right here and then sell the rest over there before it starts to go down, or right when you see the new red candle. Another strategy you can apply is you can put stop loss and then change the stop loss as it continues to go up. So you're always going to be taking in profit. So this is an example of scalping on the same exact stock, multiple times throughout the same exact day by leveraging both long and short. So a lot of strategies can be applied, and you do need some sort of capital in your account, some purchasing powers, or a good margin account in order to implement this type of scalping strategy where you're taking multiples a day. But of course, you can always buy low right here and then sell high on the breakout. So if you're working with a smaller account, that could be a good example of scalping. So let's talk quickly about what type of skills are needed to become a good scalper. You must be quick. Like I said, even though you're quick, a lot of times your orders aren't filled. So because of this, you want to be quick. You want to have good keyboard skills. You want to be able to set hotkeys. The most advanced traders, successful traders, they always set their hotkeys and they're always on point with what they're doing to ensure that they're at the quickest movement and catching the best price that they can. You must have discipline. Like I said, you have to go in knowing what your risk is, what your profit is, what your loss is. You want to identify good entry points. You want to know your dips, you want to know what the volume is, and you want to know how fast it can push up and down. A lot of indicators that scalpers tend to use is like the EMA9, which tracks it rather closely, and once it trades above that, they might take a position. Another thing is the VRAP. That is super important as well. Knowing when the stock might bounce is highly accurate in my opinion. It works most of the time, and I use it all the time. Those are my two main indicators. I also look at the RSI because the RSI helps me determine whether or not the stock is overbought or oversold. If it's more towards the middle and it seems like it's trending upwards, I identified a good position along with my indicators, I might take that dip and go in for long. Whereas if it's overbought and it seems like it's breaking sides, I can go in for a short. So have good risk management and know exactly when you want to get out, and make sure you set your stop loss. Another type of thing that you need, not necessarily a skill, but I believe that stable internet is a must. You can't really be scalping on a mobile phone. If you're using Robinhood and stuff, it's gonna be hard. People complain all the time. Robinhood is great, no commissions, but at the same time, if your orders aren't getting filled, you're not getting executed, and the price keeps jumping up and down, I mean that just makes you pretty frustrated. So you also have to have really good intraday chart understanding. You want to know what's the good point. You want to be able to use all your indicators to know whether or not that stock is dropping. You have to look at the volume. Remember, when volume dies out, it could be a rough game, but then there's always different time frames you can trade throughout the day, such as the power hours, and then buying at the lower times. There's a lot of strategies you can apply to scalping. It's kind of more like you have to figure out what fits you the best. So let's talk about why people fail in scalping. They don't stick with a strategy. I would say that's like the biggest thing that makes them fail. They hear a call out from a chat room, and then they go into a stock and they don't have a strategy. Like they're like, I don't know when I want to get out. I don't know when I want to take my profits. You have to be very strict with yourself, and you have to be very disciplined. Another thing is that they don't set stop losses, and then what happens is that you're watching another stock or something else is going on, and then you don't set your stop losses and it drops really quickly, and then you end up losing all your money. But with the stop loss being triggered, at least that if there's a massive short and it drops by 30 cents, you can actually get out of that stock, even if it's just at a minor loss. And remember, it's always good to take minor loss than big losses. Another big failure in scalping is that they hold and they pray. They didn't want to be bag holders. And I made a video on this saying don't chase stocks and don't be a bag holder. Very, very important. This is the basic fundamentals. If you're looking at day trade, you don't want to hold and pray. So like if the stock is trading at 250 right now and it drops to $2, you're like, oh man, maybe tomorrow this momentum will pick back up. I can tell you, I've done this over hundreds of times, holding and praying. And that was the main reason why I was so bad and terrible at trading in the beginning, because I kept holding and praying. I was bag holding on to the next day. And I would tell you 9 out of 10 times, you're not going to get lucky. That stock is not going to go up. And if you're failing 9 out of 10 times, that's a very bad discipline. So don't do that. Not paying attention to the trade is another reason why people fail in scalping. And that's why a lot of even the most advanced traders, they don't trade more than like 2 or 3 stocks at the same time. Because it's hard to monitor all these charts, and if you don't set the stop losses, then it can drop down every day and you're looking at another chart and you lose all your money. So not reading the catalyst, another reason. You see the spike dropping and you're like, oh, it's a hype train, I'm gonna ride on it, but the company has no news. So what is it? It's a technical breakout, and I don't like gambling on technical breakouts. It could be a quick hit and a run, but I just don't like it. I want to see if this company has news before I take the position. It has to be solid news. I also made another video on this on like what type of news to trade and what type of bogus news. We don't want to do hype train stuff, and not looking at intraday analysts. You're not like everyone has their own indicators that they look at. Like I said, I look at the VWAP, I look at the EMA 9, um, I look at the RSI, I look at the volume. Volume is super important for me, and then I want to look at the statistics of the stock. So with all this helps me determine. But that's just me. Some people get even more advanced. They look at the MACD, they look at the ATR. They look at everything. Um, you have to find what works for you, and I like to keep it simple. That's the strategy that I follow. I keep it as simple as possible, and I want to find something that works for me. As long as I have my risk management, I know I'll be profiting every single day. Another reason why people fail in scalping is they can't control their emotions. You know, you rage and you average down when the stock is obviously just going to continue trending downwards. You want to buy the uptrend, not the downtrend if you're going long. So you have to know how to control your emotions, and emotions is usually something that it develops over time. Emotion control, but you have to do it. And each time you do something wrong, write it down, stick it to a wall. That's my tip for doing it. That's how I recover from a burnt account. So anyways, thanks for watching. Hope you guys enjoyed this video and learned what scalping is and why I like it. I personally love to scalp. I mix in scalps with quick swings. That's one of my favorite things to do. One of the reasons why I love mixing in quick swings as well is because there are days like today where the market is down and it doesn't move. And that's hard to scalp on days like that. So I will make like maybe one or two scalps at the same time. I would do some swings on some like leverage ETF where I know it will be moving. So that's my style, but I love to scalp and I am a momentum trader, and that's what I train myself to be disciplined at, and that's my strategy. But I always go in with a strategy. Please subscribe and give it a thumbs up if you learned something and enjoyed the video. And as I mentioned, I'll be posting a part 2. So stay tuned for that and just subscribe and you should get the latest updates. You can always follow me on Twitter at itswilson8. Thank you guys for watching. Have a nice trading day. Power hour coming up.